that's what, it's basically, as we call it in the market, it was a suckers rally. A lot of weak hands had gone into the market. With that kind of a correction, I think there is a lot of cleansing that has happened.
In fact, talking about, lot of weak hands playing a part in the market, the retail participation had climbed to an all-time 19-month high or so last month. But foreign investors are still missing. What are they waiting for, Gaurang?
I hope wisdom prevails upon them. Because they sell at 15, 16,000 and they come at buy at 20, 21,000. What kind of wisdom is that? I fail to understand. But forget about foreign investors. I think this is just the beginning. This is just the top of the pyramid, Suyash. I think, and the way, we conduct a lot of investor awareness programs. 3-5 years back when I used to conduct IAPs, that is investor awareness programs, the awareness was very, very low. Now, after 5 years, the kind of awareness that, a small investor or a retail investor has it's humongous. And that's all thanks to the kind of information and knowledge about stock market. And people are, growing their knowledge over there, and people want to become the part of the India growth story. Either you come directly into equity markets and invest directly, or you accept SIP mode, wherein you have a systematic investment, platform to invest in. But FIs will eventually come. I mean, no chief investment officer can afford to sit on cash when you have an economy like India giving an opportunity. And where else do you get 6% plus GDP growth rate? Please identify one country. I'll be too happy to accept that.
Okay. Fair enough. Let's also quickly take a look at some of the sectors we're tracking this afternoon.
Yes, Shweta. So all sectoral indices on the NSE ended in today's session, barring Nifty, FMCG and media. All of them ended in green. Auto, realty, PSU banks were up about 1% in today's trade. Banking index, Shweta, is just climbed the 46,000 mark for the very first time since July. And it's just about 300 points shy of its record high levels. So perhaps there is an opportunity over there.
All right. And PSU Bank up almost 1.64%.
And this is on the back of 4% rally that we saw yesterday.
The rally, absolute rally continues. What's driving PSU banks? I mean, I think we did discuss this in the afternoon yesterday, Gaurang, with another guest. The kind of returns that perhaps PSU banks have given, and this is being attested to not just by us as observers and you as analysts and guests, but also the government perhaps noting that PSU stocks are the stocks to watch out for.
So this is purely because of the government doing things right for this PSU, companies. Whether it is defense, whether it is oil marketing, whether it is oil exploration companies, whether it is defense, whether it is power, whether it is railways. I think policies speak a lot, and that opens up opportunity for these entities, including banks, Shweta. So we remain optimistic on PSU banks. We are optimistic about PSU defense, power generation, power transmission, railway stocks, oil marketing companies. I think that green hydrogen is going to be a major game changer as and when we have these things getting implemented at ground level. And including oil exploration companies. And especially for PSU banks, Shweta, they have been laggards. There's no denying about that. Take a look at State Bank of India, Canara Bank, Bank of Baroda, PNB, stocks that we cover fundamentally. They started to move now. And I think, and it was nothing to do with the earnings. Earnings for this financial first quarter was much better than what our estimates were. Even last financial year, the earning was equally better. And now going forward, because of the credit demand, our sense is the entire banking universe, along with NBFCs and microfinance companies, is likely to deliver. So we remain optimistic about PSU companies, whether it is banks, defense, power generation, transmission, railways, or oil exploration, and all marketing companies.
Gaurang, I also want to touch upon metal stocks. I think some of the metal stocks were among the top gainers in today's session. Even the Nifty metal index went up about 1% in today's trade. Now the expectation is that demand recovery will augur well for the metal stocks. But the metal index in the past 6 months has surged about 25%. In the last month it's up about 9%. So do you think that the expectation of a recovery has already been priced in, or is there more room for another up leg?
So Suyash, there were a couple of things which had actually an overhang on the entire metal pack. Be it in terms of input cost, be it in terms of pricing of flat and round products, or be it in terms of one joker called China, which always has an overhang on the metal pack. But we remain optimistic about the domestic story. And if you are going to have the kind of infrastructure spend that the government has lined up at pan-India level, or the spending at state level by the state governments, recovery in the real estate sector, and along with that, you have the capex, coming through at a much better speed. So if I have to put all these things, and now of course the input cost has come down, margins are getting better as far as profitability is concerned, and consumption demand locally is going to look quite robust. India also has an opportunity as China plus one, Europe plus one kind of an advantage, but it remains to be seen how the raw material input cost pans out to protect the margins and to report profitability. But we remain positive on the metal pack.
Gaurang, also I just wanted to get your view on the sugar stocks. Now they have been on a roll lately. Stocks like Balrampur Chini, Dalmia Bharat have, I think, surged to a 52-week high. Now there was a report yesterday from DAM Capital which initiated coverage on several of these stocks with a buy rating. Also sugar prices are at a 6-year high. But then we also saw that, government asked several of these of the mills and the companies to, take stock of their output, which, created a downward pressure on the stocks. So what's your overall view on the pack, on the sugar stocks?
So I'll comment on the sector. I won't comment company specific over here because we don't have any coverage on the individual names as far as the sugar sector is concerned. So it's a sweet spot, let's say. But along with that, Uttar Pradesh, Maharashtra and Karnataka, these are the 3 states which are the largest producer of sugarcane. And because of the deficit rain, the crop as far as sugarcane is concerned is going to come quite lower, which may impact sugar production. And that will also impact production of ethanol, because ethanol is a byproduct while you make sugar out of sugarcane. So, and of course, certain news flow in terms of export ban, etc., had a little bit of overhang on the sector. But opportunity is tremendous. Pricing of sugar, pricing of sugarcane, debt on the balance sheet, and of course, one silver lining is the pricing of ethanol per liter. So the sector looks good. I would only advise that look at fundamentally strong companies which are lower or no debt as far as investment ideas are concerned.
But now, since sugar prices have surged to a 6-year high, do you expect some sort of a government intervention as far as the prices go?
It will definitely come through, because government doesn't want, look what happened to tomato prices. And because of that, where the inflation went as far as food and agri products and vegetables are concerned. So, and even for rice, there was, I think, a ban in place. I don't know if it is still there or not. So, whenever you will see,
is there's still continue to be an export ban on non-basmati white rice.
Yeah, thanks, Shweta. So that means government will take appropriate steps to rein in inflation because of certain lower production or because of deficit production. I think appropriate steps would be taken.
All right, and the big news trigger, of course, as Gaurang pointed out, is that there is rain deficit, and we talked about that story yesterday, on the back of deficiency in rainfall of sugar producing state, including state of Maharashtra, which produces 1/3 of the total overall sugar output of the country, will result in perhaps sugar output declining, and this is going to be perhaps the worst year in last 4 years, will have an impact not just on stocks but also on the overall sugar output, could perhaps also result in government taking intervention measures by way of banning export. We don't know that just as yet, but that of course is something that not just people but also government and the industry will have to brace for. But we continue to track other stocks this afternoon, Suyash.
Yes, Shweta. So let's move on to the gainers and losers in today's session. So among the gainers was UPL. Now UPL is one of those stocks, Shweta, since March low. 49 out of 50 Nifty stocks participated in the rally. UPL was the only stock that was in the red during that period. Now the expectation was that the company's debt reduction targets will not be met. Also the company itself had cut the target price of the stock. But today UPL was among the top gainers. It soared as much as 4%, nearly 4%, after brokerage firm Antique Stock Broking upgraded the stock to buy. Another stock that was in the news today was Hindalco. As we talked about, metal stocks were in action today. Hindalco recovered and was up about 3.3% in today's trade on the back of expectation that the China's construction sector will recover. Mahindra and Mahindra was another stock that was in focus today. It was up about 2.4% amid a rally in auto stocks. Also, brokerage firm HSBC has raised the target price on the stock to 1800, which implies a upside of about 14.5% from current levels. Other stocks that were in focus today were ONGC and DV's Lab. Now, talking about the losers, Shweta, Asian Paints slipped over 1% in today's session. Though should be in red actually. So Asian Paints slipped over 1% in today's session after there were reports that Grasim is looking to enter the paint business. So perhaps the market is taking cognizance of the fact that there will be increased competition for a major company like Asian Paints. Other losers in today's session were HDFC Life, which was down about 0.97%. Then there was Coal India, which has been near its 4 years high. So perhaps some profit booking we are seeing in Coal India stock. Britannia and LTIM were other stocks that were in focus today and among the losers in today's session.
All right, those of course are the big losers in today's trading session and stocks that we continue to track here on Newsline. Gaurang, before I let you go, perhaps a commentary on where do you see the market heading from here on? At a record high, at an all-time high, everybody is hoping to know what's going to happen next. I know there is the genie is out of the bottle just right now. It can't be put back in the bottle, so you can't predict, you can't say what's going to happen for sure. But what is your expectation?
Well, so Shweta, just before I comment on that, I think one particular pointer on the sugar pack that we were discussing is the festive season and the demand for sweetness. I think there's going to be heavy demand for sugar because of the festive season, so that might keep prices elevated and appropriate step would be taken. As far as markets are concerned, Shweta, I think a couple of a word of caution as far as crude oil above $90 a barrel Brent and $88 a barrel NYMEX, rupee closer to 83. And deficit rainfall. These are the three things that I am a little bit concerned in immediate short to medium term. But if you ask me, I think I'm preparing myself for levels much higher than 21,000 on the Nifty.
All right, of course, festive season around the corner, a lot of triggers there that one has to wait and watch out. But remember, there's going to be more need and urge for sugar, and sugar perhaps is going to be in demand for a long term.
In a sweet spot, as
in a very sweet spot, as Gaurang put it. Gaurang, thanks very much. Always a pleasure talking to you. Thank you so much for taking time out. And shifting focus to now, India's wholesale inflation numbers have also come out. They remain in negative for the 5th month in a row in August. As per data released today, that showed that although the WPI or the Wholesale Price Index inflation came in at a 5-month high, it was about negative of 0.52%. WPI inflation stood at negative 1.36% in July. The wholesale inflation data comes just 2 days after the Consumer Price Index data for August, which shows that India's headline retail inflation rate cooled to 6.83% from July's 15-month high of 7.44%. Sujan Hajra, Executive Director and Chief Economist Anand Rathi, joining us on the show. Sujan, thanks very much for taking time out. I want you to help understand what are these numbers and how should one read them? Is this on a scale of bad to worse? How bad is this? I mean, although the inflation is still in the negative, but it is at a 5-month high.
That's true, but having said that, if you look at the there is a huge divergence between the retail inflation and the wholesale price inflation. So last year it was the other way around, when the wholesale price inflation was very high and the retail inflation was low. So the biggest difference between wholesale and retail price inflation is that retail includes services, and so services inflation is a part of that, but in wholesale you don't get that, and it's precisely the services inflation which are softening. Net, if you look at the wholesale price data today, there is some amount of uptake so far as the energy basket is concerned. and there is some level of softening for the food inflation. So the good news is that the food inflation is softening, and obviously because of the extremely favorable base, we had seen wholesale price inflation in deflation. But from next month onwards, we will expect the wholesale price inflation to be in the positive. That's not necessarily a bad news.
All right. And how do you explain the divergence between someone who's looking at these numbers, retail inflation coming in an upward of 6%, wholesale inflation coming negative 5%, 0.5%? How do you explain the divergence?
So one thing, obviously, as I told, that wholesale price inflation doesn't include services, whereas a significant weightage is there. Second, the retail price, the weightage of food is almost 50%. That's much lower for wholesale price. Wholesale price primarily reflects the manufactured product prices. Given that, and also for example, if you look at when the retail inflation is high for food items, the retail margin also goes up. So the markup over the wholesale prices even for the food items, that also goes up. So these are the known common factors for which there is a divergence between wholesale and retail. But having said that, the kind of difference which we have seen over the last 15 months or so, that's extraordinary divergence. But going forward in the next 6 months or so, we think this divergence will come down.
Okay. Am I right to then say that it's the food inflation that perhaps is leading to higher retail or headline inflation? Food inflation continues to be a major cause of worry?
True. If you, in fact, in the retail basket, if you look at the average inflation for food and non-food, they are almost identical. But the food, I'm telling over a longer term. But if you look at the volatility of food inflation, it's significantly higher than non-food. So it's not that on an average food inflation is higher than non-food inflation, but food inflation is notoriously volatile. And because food inflation is notoriously volatile, that's why generally the retail inflation becomes far more volatile. This time around, because of the pandemic effect, the wholesale price inflation has been very volatile over the last 18 months or so. But generally, retail price inflation is far more volatile, and that's because of the food. Yeah.
All right, and I also want to take your quick views before I let you go. I think it's very important for our viewers who are looking at this bulletin, want to perhaps understand what is the inflation trajectory going to be, retail inflation trajectory going to be specifically for food, including vegetable and pulses, because that has been a whammy for a lot of consumer. Now, it has gone down and gone down marginally, still in about an upward of 25%. That is the vegetable inflation that's come in the month of August. Are you looking at this number going down in the month of September, or is it likely to go up? Or, given that the rainfall is not very favorable, is not likely to be very favorable in the month of September?
Yeah, so see, the impact of the rainfall won't be felt now. Impact of the rainfall until unless there is a flooding and supply disruption. But otherwise, the rainfall impact will be visible somewhere from November, December, when the current standing crop gets reaped. So therefore, there is not so much of impact on rainfall right now. If you look at in absolute terms, the food prices, and again, I'm not talking about the food inflation, the food prices fall normally between November and February. So that's why there is a great chance that the food inflation will turn around and come down significantly going forward. But having said that, inflation in the range of 5 to 6% for several months is something which is likely. So while we would expect that the inflation will start coming off, but the cooling off might take some time, and the overall normalization can take up to 6 months. So the good news is that inflation will be lower. The bad news is that it might not happen very significantly, very immediately.
All right, and what's the time frame we're looking at?
So I think definitely for a 6-month period, inflation will be on an average more elevated. Quite possibly it will be even a 9-month period for which. So obviously the direction is downwards, but it can be significantly higher than long-term average for a 6 to 9 month period.
All right. And as far as RBI's tolerance is concerned, do you think it's likely to come within the plus minus 4% or 6% range? Is it going to be within the 6% comfort zone anytime soon?
See, below 6% is pretty possible, pretty much possible. But in a recent monetary policy, post-monetary monetary policy statement, Governor very clearly said RBI is not so much RBI is not happy if just because just if the inflation comes in the tolerance band of 2 to 6%. RBI wants inflation around 4%. Okay. So for inflation to fall to 4%, that might take on a consistent basis, that might take quite some time, and particularly the inflation remaining stationary or hovering in a narrow range around 4%, that might take quite a bit of time. So, but having said that, RBI also realizes that the cumulative tightening of monetary policy in 2022, not only in India but also globally, that will have some kind of negative impact on growth. Obviously, we started the current financial year with a 7.8% GDP growth, but we are looking at a overall growth of 6.2%. So therefore, the full year, the growth will be slowing. So given that the growth is also now a concern, so RBI might tolerate a higher than its tolerance level of 4% for a longer period and remain in the pause mode. But RBI won't cut the rates in a jiffy. So RBI will tolerate in terms of maintaining a status quo rather than cutting rate.
Okay, and how long is that status quo likely to be maintained? As the expectations are, it's not going to happen this year. There's not going to be a rate cut, at least before the end of this year, perhaps the last quarter. Is that the expectation? Last quarter of financial year 24, a rate cut? Is it expected?
From where I see and my more than a decade experience working in RBI, I don't see RBI doing a rate cut before 9 months. Most likely not even in a 12-month framework, because RBI would like inflation sustainably around 4% range before doing a decisive rate cut.
All right, and Sujan, before I let you go, what's exactly going to weigh in for RBI's headache on inflation? What factors are likely to play up because core inflation still remains relatively under control?
See, again, one has to understand RBI doesn't target core inflation. RBI targets the headline inflation. So therefore, while the core inflation remaining subdued gives RBI some amount of solace, but in terms of RBI's explicit mandate to control inflation, it's the headline inflation. So RBI can take a slightly accommodative stance on the liquidity side if the core inflation comes down. But having said that, RBI cannot relent. But having said that, the next year is also the election year, so you don't want to go into the election year with a very tight monetary or liquidity condition. So RBI on the margin might be slightly more accommodative in terms of liquidity, but I'm not seeing a rate cut anytime soon. In fact, I don't think any major central bank will do any rate cut in the next 6 months, contrary to whatever is the popular perception.
All right. If I heard you correctly, Sujan, you said that RBI will look at headline inflation and not core inflation. Perhaps the bigger headache would be therefore, energy and food prices as well. Is that correct?
Yeah, that's absolutely correct. That's RBI's mandate. RBI doesn't have a choice but to focus on the headline, because that's what is the mandate. So a lower core inflation can give RBI some solace, some kind of breathing room, but it's not sufficient condition to go for a rate cut or change in the monetary policy stance.
All right. So therefore, a lot of things that perhaps RBI will not be able to control by the way of food and energy prices. Sujan, always a pleasure. Thanks very much for taking time out.
Thank you.
And we're going to move on to a very important story that is coming in by the way of India's startup ecosystem. Byju is once again faced with serious allegations. Lenders to the edtech giant Byju allege that the company hid $533 million in an obscure 3-year-old hedge fund, as per various media reports. Now, lenders are seeking to recover the substantial sum that Byju apparently transferred to Camshaft Capital Fund, an investment firm that was founded by a 23-year-old and was once listed as a pancake restaurant. The financial routing has sparked a legal battle with accusations of default and predatory tactics. The allegations are the latest in a slew of increasingly public battle between Byju's and the lenders who claim that $533 million is in fact collateral to the $1.2 billion loan that Byju's has taken from lenders, supposed to pay it back, hasn't paid it back. The ongoing battle is becoming murkier and murkier. My colleague Krishna Kumar joining us with more details. I'm also given to understand Srinath Sridharan will be with us very, very shortly. But Krishna, Srinath is here. Let me come to you first, Krishna. It looks like, worst is not yet over for Byju's. Right. Day after day, there's one allegation on top of another, and it appears like a lot of dirty laundry that's come out in public for Byju's.
Right. As we speak, Byju's has come out of the rebuttal to all these reports. But let's first go back to all what's been the reports in the first place. It was a Bloomberg report, Shweta, that essentially said that $533 million was parked in Camshaft Capital Fund, as you said. And Camshaft, incidentally, was run by a guy called William C. Morton, who is 23 years old and has not enough training or not enough experience in the arena of being a hedge fund manager. So there is a question mark over why and how this money was transferred. And William C. Morton, incidentally, was recently found to have been buying up a bunch of luxury cars, from a Rolls Royce to a Lamborghini to a Ferrari, you name it, 3 luxury cars in his name. And meanwhile, his own company, Camshaft Capital Fund, in a securities filing in the US in 2020, it was discovered that the address given as the main address of Camshaft Capital Fund was actually a pancake shop called IHOP. So the Camshaft Capital Fund, it's as an entity, has some really interesting information coming out of it. And Byju's, the first allegation was that it transferred money from Alpha Inc., which is also one of its subsidiaries, to this hedge fund called Camshaft Capital Fund. Now, Byju's in its rebuttal has now said that the money, $533 million, is not parked anywhere. It's put in long-term fixed return securities, and that the beneficiary of the money and all the interest that accrues on that money still remains to be Byju's. And in that sense, they haven't really siphoned off the money anywhere. Okay. They still have They said they've invested smartly in the right long-term financial instruments.
All right, Srinath Sridharan joining us on the show. Srinath, in your understanding, does the current investment, as Byju's would like to call it, not siphoning off, perhaps investment in a hedge fund, does that make the cut for the right sort of investment? What makes the lenders say that Byju is hiding money?
So I think, Shweta, there is no right or wrong here. They've moved the funds aside and kept it. It would have been part of a treasury operation. But what strikes me as very, very strange, Byju's has not been in the news only in the last few weeks. It has been there in this news for the last many, many months. So what were its investors and board actually doing? You don't move $500 million assuming that money came in with a transaction and the money moving out. What was the board asking questions? And what about those treasury investments? The fit and proper criteria of where they were parking the money aside, it kind of tells me if such were the news, it actually means that the founders have the ability to move enormous amount of money without any control at all. So that's a question to all their marquee investors who have pumped in billions of dollars. That's the first question. 2, I think it also reflects very poorly on all the practices that so-called big Ps who have invested money have, saying in a good time you don't ask questions, in a bad time every single penny seems to be asked. But also we must be very mindful that a couple of hours ago, I think Byju's has got relief from this case. The Florida court has actually said, and Byju's is also suing the lenders in the New York court. They've given relief that they have the right to keep the money. It was on the restricted list and so on and so forth. So 2 parts to your question. 1, did Byju's have the right to keep it anywhere? The answer is yes. But that's what kind of amazes me, that what was the board doing.
Okay. Interesting.
if I have to have one thing to ask Srinath, it would be that the credentials of Camshaft Capital Fund is what is making us question this entire thing. Because if they did transfer money to Camshaft Capital Fund to run by 23-year-old William C. Morton, who's bought a Ferrari, Lamborghini, and a Porsche, and then and originally listed address for the business was actually a pancake shop, and then they want to list it somewhere else. I think they want to go to the Cayman Islands now. All of this is what is making us question where exactly is the money being parked.
Oh, absolutely. In Gen Z's language, I think it should be called a sham shaft rather than anything else. It's been a completely... see, again, that's a part of the process for any treasury operations, right? Typically, people would say when you're struggling for money and whatever you get, you would get it in AAA rated entities where your monies are safe, where it is liquid, so that you can call for it when it is needed. So it looks like a very deliberate amount and effort to keep it away, and without any control of the board and the investors at all. I'm very, very intrigued with the Indian startup investors now. I mean, all those so-called control and influence and MIS decks that they ask for from the founders. I mean, this is a proof of the pudding. I mean, they have absolutely no control. So I want to actually throw this back at both of you at one question. We have seen this play out for many, many months now. The lenders are struggling to get their monies back. The equity investors, the existing investors, the big names actually dropped out of the boards, saying that their SHA kind of told them to get out. And we know the reasons probably why it was partially true and partially no. They've been struggling to raise newer money. But the question is, why will anybody put fresh equity capital to clear the old mess? That's one question. And very simple, if you logically look at this, I think there seems to be only two solutions at some point in time. One, will the existing lenders accept a very, very discounted haircut for their monies and get the money back? Two, will the existing investors very pragmatically say that, you know what, all this euphoria of $10-20 billion valuation today probably was overhyped by 10x, 20x, and we will look at a very, very realistic number. But then it also means, can they affect a management change? That's right. One option. Second option is, can somebody actually take them to insolvency court?
Mm-hmm.
Okay,
fair enough. Those are some interesting propositions. I mean, honestly, as a journalist who would love to be impartial on this, I have no say, Srinath. But the options that you put on table, I think it's going to be a hard bargain for lenders all in all.
Absolutely. See, I think in an unlisted startup that you've invested billions of dollars, I think for the investors, the equity holders, at some point in time, they will have to, if they don't believe in the story, write it off and go back to their original investors and say, we wrote it off. I think the lenders would fight till the last. Typically, the lenders always have access to courts and they do that. So it won't be an easy win. I mean, and the larger challenge is amount of money that they would spend in legal fees in fighting this case in the US. It won't take, they need lots of guts for it. The other one is, since it's a company based out of India, will somebody actually move the insolvency court and get it going, get it slashed? I think the challenge is going to be, this company is seen as, I don't know, the poster kid for EdTech, and it has also put EdTech industry in a large quandary now.
Right.
So I don't think there is any way out, because the operational creditors in India could take them to court and say that enough is enough, we have waited for 1 year. But I'm surprised or intrigued that nobody's been speaking about it all this while.
All right, perhaps they will start speaking about it now. There are a lot of questions being raised by the way of whether Byju was in the wrong in putting money in a hedge fund that perhaps is run by a 23-year-old. I have no objections to the person's age. I have absolutely no qualms about how many cars he or she has. I think it's more or less about whether that was the right sort of investment that Byju's made or not. We'll keep bringing those questions. Srinath, thanks very much. I think this requires a bigger conversation. Perhaps we'll get you back and have a longer conversation on this one. But for now, we're going to move on. A story that we are tracking by the way of Union Minister Nitin Gadkari, who has now retracted the call for 6 airbags in a car or a vehicle, saying that the government will not make it mandatory. Now, many are looking at it, in fact, as a government U-turn on mandatory 6 airbag enforcement or policy. Back in 2022, Nitin Gadkari, the road transport minister, said that the Indian government has made it mandatory to have 6 airbag rule for passenger cars. The rule was reportedly set to come into force in October of 2023. However, Nitin Gadkari now says it's no more mandatory. The question, Krishna, that everybody will be asking is, why did you retract? Why did you retract at this point in time? Is safety no more a concern? Was it a concern last year? Suddenly it's no more a concern today? Are you buckling under pressure perhaps from auto companies who perhaps would not have been able to comply to this diktat anytime soon?
Right, and for that, the big differentiator at this right now is that we've had Bharat NCAP being launched in the middle of all of these things. So that's what Union Minister Gadkari is also talking about. Now we have Bharat NCAP and other safety ratings, global safety ratings, and enough. Both of these are enough to determine whether a car meets safety standards or not. And as long as cars pass through those safety standards, specifically speaking the Bharat NCAP safety standards, he believes that they pretty much make it as foolproof as possible. So why do you need to have another separate rule in place? Just go in and get your safety standard safety ratings, both global and for Bharat, and then you're good to go. That way, the procedure becomes simpler for auto companies as well, and at the same time, there's a check on whether cars that they make are safe or not.
Okay, so you comply with NCAP, therefore we don't have to make separate rules for safety, including the 6 airbag policy. It will be a part of the safety ratings that you'll be given or not. But it does come as a big relief. In fact, from what I'm reading, it comes as a big relief for a lot of players who would have to comply with it come October of 2023, but they don't have to anymore. And the cost of making that car, the cost to company and the cost to buyers like you and me would have also risen. But that's not going to happen either. But it is being looked at as a U-turn by the government, and Nitin Gadkari there facing a lot of backlash for that statement and retracting that statement from the public. But as we close, another big story that is happening right now as we speak. Tata Motors has launched the Nexon Facelift as well as the Nexon EV Facelift in the Indian markets today, the 2023 Nexon Facelift and the Nexon EV Facelift will be available in the Indian markets at 8.1 lakh and 14.74 lakh rupees respectively. I don't know if we have the visuals. I hope we have the visuals there. But interestingly, the Nexon story, okay, we have the visuals of Nexon there. That's the facelift Nexon. And, not a substantial jump in prices there as well, Krishna.
Right, not. And the thing is that this is a facelift where you get a 7 DCT petrol engine. You have some changes over there, but the thing is that the Nexon will continue to compete with the same cars it competed with before.
Right.
So this facelift, both for the regular Nexon and the EV, means that it continues to fight with, say, for example, Nexon fights with the Maruti Suzuki Brezza, the Kia Sonet, and all the other cars in that compact SUV category. Nexon has been beating these cars and has been reigning as number one across this in the recent past. But what it means is that the competitors of Nexon are the ones who have to be watching at how well consumers will lap up this new and improved Nexon.
And looking brilliant there in purple. That is a compact SUV. As we break down what SUVs are, and you've done that, Krishna, quite a lot for us. That is a compact SUV, the brand new Nexon, out in the markets, available at a starting price of 8.1 lakh rupees, and the Nexon EV at a starting rate of 14.74 lakh rupees. Well, with that, it's a wrap on this bulletin. Thank you very much for watching.
With all this gear, you must be wondering if I'm climbing a mountain. Well, let me give you a wider look of this place. This is Asia's largest mountain of shame.
A mountain of waste, almost the height of the Qutub Minar.
When you enter capital cities of some of the biggest countries in the world, you don't have 3 garbage mountains waiting to welcome you, depending on whichever side of the city you enter from.
The thing is that a lot of times we talk about landfills only when there's a fire at the landfill. You need to understand that a landfill is at fire almost throughout the year. It's only when the firefighters are not able to douse the fire is when it actually catches the nation's attention, the city's attention, or media attention.
The towering landfills worsen one of Delhi's biggest problems: pollution.
यहाँ पर आप रात को आओ, दिन में आओ, आप 1 घंटे बैठ नहीं सकते बाहर। इतनी धूल, प्रदूषण, महक, आप खाना भी नहीं खा सकते बाहर बैठ के।
Life around the landfill is a curse.
हमारे घर में जो बड़े हैं उन्हें अस्थमा के वो पेशेंट है, आए दिन उनको नेबुलाइजर लगाना पड़ता है।
डॉक्टर ने भी मुझे ये चीज बोला कि यहाँ का एरिया छोड़ के कहीं और चाहिए।
Delhi's garbage mountains are now a fetid symbol of the national capital's trash problem. The question is, who is to be blamed? Watch Delhi's Garbage Mountains. Streaming on News 9 Plus for the Genflix.